What is going on, everybody? Today we're going to be talking about 4 timeless trading lessons that I've learned in my 8 years of trading. So without further ado, let's get on with it. So number one, find something that fits you, but make sure for God's sake that it actually works. So if you look at how most trading is taught on the internet now, there is something that I agree with, which is you should be building something around your personality because there are so many different ways to trade. It doesn't really make sense to pick something that doesn't really gel with who you are. In fact, let me just shrink my face down quickly. And so because of this may be something as simple as, okay, I prefer trading trends. Or maybe I prefer selling and fading extremes, so a mean reversion style trader. And then it would be other questions like, okay, how long do I want to hold trades? What type of information do I like looking at? Do I prefer technicals? Do I prefer more fundamentals, sentiment, a blend? Like, how does it work for me? And these questions are all really helpful because they help you understand, like, okay, what am I most likely to be able to stick at? Because if you can't stick at anything, then no trading strategy is going to work for you, obviously. However, I do feel like there's a bit of an issue because what happens then is people take this to the extreme and they start basically just building edges that they wish existed rather than edges that actually exist. So when it comes down to the edge itself, I want to start off with an example of, let's just say you were starting a business. And let's just say that you really needed the money, right? You need the money, you need this business to work in the next 12 months. What do you bet on? Do you bet on what's trending? Or do you bet on what's been proven over decades? So basically, this is another way of asking, do you want to be like the exception to the rule? Do you want to be that hero that finally breaks through and proves everybody wrong, including like literally thousands, if not millions of people in the past that have tried to do what you're doing but failed? Or do you just want to go with something that maybe even slightly more boring, but something that is durable, something that has real weight behind it? Well, the smart answer to this is to pick the thing that is more durable over what's trending. Now, in business, that could be instead of you starting a crypto project and which you have no idea how it works or no interest in, but you think that there's money there, versus starting something really boring like, I don't know, a fucking window cleaning business. Just an example. But one has clear demand, one is proven, and the model is proven. Whereas the other one, like, it's a brand new world. Yes, it's exciting. Yes, it's all really like buzzy, but is that buzz going to be there forever? You don't know because it's new. And if all your chips are on one thing, like all of your decisions are resting on that one thing, why would you pick the more risky version? Um, and of course, it doesn't mean that with what's trending, it can't work. But this is the important thing. Do you really want to try to be the exception to the rule? Do you want to be the 0.01%? Or do you think it's probably easier just to be in the kind of 10% of people that are kind of doing slightly better? And so, unfortunately, though, most traders, they'll go round in the normal cycle of doom. So they will watch a YouTube video and get a strategy from it. Watch a YouTube video like this, and then they will back test it. If they've got any kind of mild sense, they will well, back test it on past data, then go to demo, then maybe go to live. Or if they're a bit more risky, they'll just go straight to live. They'll normally do 100 to 200 tests, and they'll think that they're Batman after doing this. The problem with this though is eventually they will hit a losing streak, or it will stop working. This is something that any algorithmic trader that's being honest with you will tell you. When you go into the algorithm space, it's like a pressure cooker in a way for traders because they suddenly get to test thousands of combinations of things in minutes and over huge amounts of data. And people will often, when they first get into it, go through this whole period of going back and back testing as far back as they can, doing all this fancy stuff. And one thing that you'll learn quite quickly is that 99% of systems and variations of systems don't work if you backtest them back far enough. Backtest them back far enough. And the reason for that is because they lack adaptability. And by the way, step 4 here is we cycle back to step 1. And so really the key thing is understanding, how do I pick something that is adaptable? Because adaptability, the market doesn't behave the same way at all times. Like there may be 2 years where it's doing like a kind of consolidatory movement. There may be then a sudden huge move over the next 6 months to a year where it's just basically directional with no pullbacks. If you have no adaptability, then this will either crush you, erode all of the profits you made during here, or you'll just be in a drawdown. That's not helpful. And it's also doubly soul crushing if you've been going around telling all your friends and family, I did it. I've made trading work. Like it's, oh, I'm so happy with myself, all that work that I put in. And then suddenly, not only have you given everything back here, but now you've basically psychologically gone, oh my God, like I've wasted the last 2, 3 years. Like it was all for nothing. That is extremely psychologically challenging to deal with. Not just that, but it's also not really that efficient. And so, how do we be adaptable? What's the core idea? The core idea is we need to have something in our system that is forward looking. If you don't have something that's forward looking, by definition, you are always reacting. And if you're always reacting, then you're always going to be behind the curve because you were always waiting for that next thing. Now, are there exceptions to this? Maybe you're thinking, yeah, but this wouldn't happen to me because I'm using a stop loss. And so I would have been stopped out and I would have missed this whole thing. Yeah, maybe you would. But eventually, if you keep getting stopped out, things keep adapting. This is one example. But what if things keep shifting and they shift all the time, regularly? For example, if we have this one big shift over, let's say, 6 months to a year, but within here, we could have lots of other shifts that are constantly moving. The market condition, it doesn't have to say it has to be one way for 6 months or this or that. And so if you're not prepared for that, you're basically taking a leap of faith in a way. Doesn't mean that it's 100% leap of faith. I'm just saying in terms of having 100% or at least a high level of confidence in what you're doing, it's probably not going to be the best source of things. And so when we look at the original statement that I made here, which was find something that fits you, but make sure that it works, right? When we find something that fits you, it's about finding something that works, so an edge that is adaptable. But when we're looking specifically at this part here, the forward looking part, it's okay, well, what does my personality agree with, or am at least remotely interested in terms of forward looking stuff? So let's just say that fundamentals didn't really interest you as much as you wanted. You just wanted to know the kind of general gist. Well, some people can look at the technicals of leading markets. So I'll give you one example. If we look at commodity markets, they can often lead a lot of sectors slash individual stocks. Well, because if you think about it, a lot of companies are based on selling a commodity. If you make electric vehicles, you're going to need all of the raw elements that go into making the batteries and this and that, and all of these sorts of things that go into making something. And so commodities can be a leading indicator. If you can read a commodity chart, there is an argument to be made there that you can have an element of predictability. Big caveat to this, though, is you need to be very careful which market you're picking, because obviously each of these markets has its own things that drive it. And in a way, this is still backwards looking. In an ideal world, you want to have something that is uniquely forward looking. And so whilst these things are really helpful, they're not often going to be the full piece. Now, one thing right now is I'm building out the free Telegram. It's still a little quiet in there at the moment, depending on when you're watching this, because I've got a lot of really, really big stuff planned and I want to hit the ground running with it when we start ramping up the volume in there. But this, if you're not interested in doing all of the fundamental stuff yourself, you are interested in stocks, but other markets as well. I just largely trade stocks now, then that's going to be something that you may want to go and check out, because I'll show you examples of this. But the general gist of it is I'm using fundamental forward-looking methods to assess what is likely to happen. This is both like the overall risk of what's going on, but not just that, it's also where things are projected to go, how things are changing, the momentum, that are a little bit more in depth than just I look at a price chart. So anyway, this is the long and short of it. So pick something that works, but also make sure that it's based around your personality. And just as a quick side note to that as well, in terms of psychologically, right, when we think about, oh, what do I want to be? What type of trader do I want to be? A lot of the psychological mistakes that you will see people talking about, I can't hold my trades to target, I let my winners run too long, or I can't scale in with confidence. A lot of things, those things come because you don't have a good why. And so if I had to condense it down to a statement, it would be, when you know the why, the how becomes easy or easier. So if you know why you're in a position, if you really are confident in it, then it's much easier to hold. It's much easier to scale in. It's also much easier to sense when something's wrong because you know why the price was doing what it was, instead of going, oh, the price is in a downtrend and it's just hit this level. Do you know what I mean? It's like, do you really think that that is how prices are being moved? Now, am I saying that technicals can't work? No, of course not. There's a time and a place for technicals. I'm just saying, for me, I always found the bigger edge was from diving into this other stuff. And luckily, which leads into my second point, it can be simplified quite a bit. So simplification, this can come in multiple layers, right? It can be something as simple as simplifying the overall fundamentals. So instead of looking at 40 economic indicators and doing all this complex stuff, instead of that, it could be something as simple as, okay, I'm actually just going to look at the representation of all of those 40, because all those 40 are leading into this one composite indicator that I found. And normally they already exist all over the internet, or maybe it's into a rating. Or if you saw my last video with stocks, like EPS revisions, earnings per share revisions from top analysts at institutions who are revising it based on all the fundamental work that they've done. These are methods of simplifying the process down. What a lot of you will be most familiar with is simplifying a technical process down, which is great. It's a great start. But for the most part, technicals aren't moving price. Just not. Okay. Are they good as a timing tool? Absolutely. I love technicals as a timing tool. They're not my only timing tool, but they are one of the components to my system in that sense. So you're going to find that this is not just easier in terms of strategy, but it's also important in terms of how you're able to execute on things. Because I'm sure you've been in a scenario where you've taken in all this information and you just don't know what to do with it. It's too much, you can't concentrate. If that's you, you need to think about what is actually preventing you from doing the right work. And so it's a blend of simplifying and finding something that works with you. If you don't do that, everything will become way too complicated and you will end up basically trying to become this like genius, mathematical, perfect, organized, systemized trader. And that is a fantasy for most people, especially most individual people. If you were a team, all very kind of qualified, more possible. But as AI goes and grows, like, is that really the route you want to go down? You want to compete against computers, and computers are getting exponentially smarter? Not the best bet, in my opinion. Next one, focus on durable edges. I've kind of already discussed that, but just to kind of go, I guess, into a few more points about it. Is it so easy to pick the thing that's attractive or sexy, or someone comes up on your newsfeed and they're like, oh, try the, magic 360, backflip method with like double pump, triple dump, yada, yada, yada. Like, it sounds great. And the big thing is, this is something that's known in the marketing world, right? And I'm not going to name any specific names, but if you have a group with a high amount of uncertainty, so in trading, traders have huge uncertainty, because even when you're doing things correctly, there's always a level of uncertainty, but the outcome of each individual trade, no one knows, right? And so because of that uncertainty, if you have somebody coming along grinning, I don't know, just imagine them grinning. Okay, they've got one arm by the looks of it, or maybe they're facing that way, I don't know. But you take this uncertainty of this huge group of people and you come along and you say, hey, you know what? Like, I know you're feeling this uncertainty, but I know something that all these other people don't, that is going to fix that certainty for you. In other words, this person gives you the why. Now, the problem is that this can be done in a good way. If the actual why has backing behind it, it's grounded in something tangible and is a good why. Obviously, you can't say that all whys are bad, but you also can't say that all of them are good either. But basically, if you just look at this, is that if you have someone coming over to a group of uncertain people and explaining why, then they're going to, as long as this person is doing their job correctly and explaining it in a way that makes sense and yada, 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 they will look at this and they'll be like, oh my God, I didn't know this. This is something that's really cool. And they will latch on to basically a new belief system. And so all of the kind of big cults in the trading space, and I'm sure you guys have an idea of one of the big ones that I'm referring to. If you have somebody coming along and saying, oh, the markets are, controlled by a small group of people and I have the inside scoop on this or that or whatever, and you go down that rabbit hole, all you're really doing is you're engineering belief from a group of vulnerable people. That's it. Especially if you're not backing this why up with data, ideally some kind of like clear, proven relationships in the market, because chances are you're not going to be the pioneer, and chances are the people you're watching on the internet are not pioneers. I am not a pioneer. I've not pioneered a intricate an analysis of all of these different elements and things that fit together. Like, I haven't done that, but what I have done is I have stood on the shoulders of giants in a sense, and understood, okay, these relationships are proven, these things have happened. How can I adapt what I'm doing to incorporate what the lessons that have been learned from them? you know? And so this is the big thing, right? This is a super common thing in marketing, and it is a force that can be used for good, it can be used for evil. One thing you've got to really keep in mind is that narrative equals caution. So this is true even in the actual fundamental analysis process, but just in terms of the information you consume, you've got to be a little bit cautious when it comes down to narratives, myself included. If I'm saying something, you should always go and understand the backing behind it. I will try to leave sources wherever I can. If there's ever anything you feel like is unfair that I've said or whatever, let me know, and I will always try and explain and give you the sources for why I've actually come up with these conclusions. But the main essence of what I'm saying is be skeptical, be cautious, be especially when you hear narratives, because anyone can make up a narrative. I can say that I was, bundled into a van and, told the secrets of, business or trading or fucking, I don't know, running, and then from there, like I'm holding some sort of secret source that's going to help you with whatever you're doing. Like, you can package that shit up all day long, but like, does it have any grounding in reality? That's really the essence of that. So durable edges are things normally that have been proven. So finally, risk reduction is as important as edge. Guys, please, I know that you're going to click off at this and be like, oh, yeah, I already do that. I manage my risk. I've got a sweet stop loss and a positive risk reward. I am managing my risk. Technically, there is nothing wrong with this. However, it is a very one-dimensional view of risk management. If this is all you think risk management is, and maybe adding on the obvious stuff like, other tools like scaling in, trailing stops, like there are infinite amounts of tools that you can do, obviously position sizing, dynamic management, all this sort of stuff, right? This stuff is fine, this stuff is great, and for a lot of people this is all they ever really do. However, a professional takes it to the next level, right? A professional breaks down the exact type of risk that they want to be exposed to, and they isolate that risk in order to get what they want. Now, I actually ranked all of these in a table in one of my previous videos, which I'll leave up on screen. Okay, my screen's disappeared. I'll leave that up on screen now if you want to go and check it out. Highly recommend it. It shows you how to actually identify, okay, what is the risk that I'm predicting here? Because with risk comes opportunity. And if you know, okay, for example, I'm trying to predict a stocks movement, or I'm going to try and predict the S&P 500's movement, or whatever it is, like, if you know what you're trying to predict, then you can isolate all the other things that are also moving price, but you don't want to be exposed to, and you can just focus on that. This allows you to not just be more confident in the edges, but also have a much more sophisticated form of risk management baked in as well. Because believe it or not, just because of whatever your reason was for entering right here, even if it was just technical, there are multiple things affecting your trade, whether you like it or not. And if you're just going, oh, well, this looks right, this looks like it's good, you're basically just hoping that all of those 5 things align, or at least one of them strong enough to override the rest, and that your trade will play out. This is a less professional way to do it. Does it mean that it's unprofessional? There are people that do it, directional traders. It's very common to do this style of approach. For me, I just want something that's more durable, more sustainable. And then if I want to have a portion of my portfolio dedicated to more like clear directional bets constantly, going for like the kind of moonshots, so to speak, that's fine. But that is a personal preference. I can't answer that question for you. None of this is financial advice, obviously. So anyway, go check this video out. This will explain what I'm talking about, and hopefully you will enjoy. But I hope you have a great day, and I'll see you in the next one. Take care.